Alright guys, let's have a look at SPY Sp500 SPX. Happy Valentine's Day, by the way. So let's get started. 41.36, that's where it closed today. Pretty much flat after CPI number, and it's pretty calm day actually for CPI day actually. So, and it's not negative despite CPI slightly ticking higher. So what I'm watching from here, so basically I know a lot of people may be talking about bull flag, which means a bullish basically pattern, or S&P 500 may be flagging right here for a lot of people, and as soon as it breaks out of 4150 it's gonna go a lot higher. So that's one thing people are mentioning a lot, but I will not be going that far. But yes, it is a bull flag, maybe not. From here, resistance is still 4200 for me, and to the downside I'm still watching this 4050, and all the way I'm watching 50-day moving average right here as a support. And this week is pretty big week. OPEX 17th of February is a option expiration week, and if you take a look at the maximum pain for SPY, it's 402. So usually you want to pay attention to OPEX weeks, OPEX months, where billions of dollars are about to be expired, and usually market makers try to basically close the market at around most uncomfortable level for both put buyers, call buyers, put sellers, call sellers, all that good stuff. So that's that. And also today, another thing I wanted to mention is tech. So basically market is holding up because of tech still. Most active stocks, Tesla, Nvidia, strongest names today. 5% Nvidia, 5.5%, Tesla 7.5%, Microsoft flat, but still Alphabet, Amazon, you can see Google, Meta, AMD. These were the most active stocks, and they're still most active stocks today, at least they were. So and what else I'm looking at? 5-day moving average, 20-day moving average for percent of stocks in S&P 500, 65% for 5-day, and 60% of stocks above their 20-day moving average. Why do I care about that? Well, we have already spoken about that. It's basically momentum, what momentum is doing at the moment. So the higher the number, the better. You want more stocks to participate in that rally, because if you take a look at the heat map of today, well, that's what happened. Why market didn't go down? Because biggest market cap stocks didn't get hit, such as, well, Apple was slightly negative, but it did recover since the morning. But Microsoft, Nvidia, all these chip makers, Google was flat, Meta was flat, Amazon was slightly positive, Tesla was positive. So these are the big names, okay? And of course, some financial names held up, but everything else was getting hit pretty decent. So, but you didn't notice it because in indices, well, these big stocks hide those kind of pullbacks because they represent pretty big chunk of S&P 500. So if you take a look at the returns, well, Nasdaq 0.5% today, S&P 500 flat, Dow 0.5% negative. What I wanted to mention in this short recap today is basically SPX put to call ratio for the past 4 days were pretty high. 1.46, 1.56, 1.4, 1.4. So you want to be careful when put to call ratio spikes. Usually we get some sort of a flash and pullback, pretty decent pullback, 2%, 2.5%, maybe even 3%, but just keep in mind. So that's the very short update. I'm not going to look at the SPY, basically SPX. These are the levels I'm watching. So, and if you are bullish, I mean, we are still in a bull trend. As long as we are above this trend line, it is still bullish. But short term, ultra short term right here, right now, we could be neutral to bearish, but we'll see. I'll update whatever happens, whatever the move we're gonna get from here. We'll definitely cover and we'll see what's going on. But so far, from today for the rest of the week, that's what I'm watching, and I'm not super bullish, I'm not super bearish, but I'm a bit cautious because upside potential reward is not too much, but downside risk is pretty high. So that's what I'm watching for SPX and overall market. Thanks for watching. See you in the next update.